of yesterday, in the previous class, I have not told you the total process of maintaining capital account in case of partnership. In case of partnership firm, the capitals are maintained in two alternative method. Number one, fluctuating method, which has been done yesterday. Now let me discuss in the pros and cons of fluctuating method. Fluctuating method, so it is the capital account. Under fluctuating method, a single account is prepared, and that is combined capital account or partners capital account. It may be individual, but individual capital accounts will consume huge amount of time and space. So we would like to prepare partners combined capital account. That means in one format there will be different column for the different partners. सब एक partner के लिए अलग अलग column रहेगा, but particulars will be the same, okay, and in the both side, in the debit and credit side, okay. So friend, that is the basic premise, clear, of combined capital account. Now what would be the method? Just friend, yesterday I took up one problem, and the problem contained the opening balance of partners. There were two partners, Mr. A and B. The short note of the yesterday's problem is over here. There are two partners Mr. A and Mr. B, 1,60,000 each. Additional capital introduced by Mr. A at the middle of the year, that is 20,000. The drawings made by them were 10,000 and 6,000. Remuneration per month 3,000 A, 2,000 B. Interest on capital at the rate of 10%. Interest on overdrawing is 4%. Profit share ratio 3:2. Profit earned during the year 1,20,000. And loan, interest on loan 6% per annum. Additional capital contributed by Mr. A was 20,000. Okay, and the loan contributed by Mr. A on 1,720 is 20,000. Okay, so this is the same problem which I am taking up. यही प्रॉब्लम तो आज हम लोग का आज का प्रॉब्लम सॉल्यूशन और आज को टॉपिक को डिस्कस करने के लिए यही प्रॉब्लम तो हम लिए हैं. ओनली वन थिंग इज डिफरेंट. व्हाट इज दैट? आई हैव एडेड वन important aspect, and that is the opening current account balance. It is 15,000 in case of BA, and it is negative balance in case of B. Now I am coming into the methods. First of all, yesterday what I have showed you? I have showed you that I have shown you there is a single account. And what is the account? Account क्या नाम है बाबू? Partners capital account. Fluctuating method. Fluctuating method means there was an opening balance of 1,60,000. देखो, just you see the opening balance was 1,60,000 in case of B. Now to this account we have added all the items which would have increased the total balance of capital of the partner. And what are that? The amounts, additional amount given by Mr. A, that is I have in detail discussed, so I am not detailing right now. So it is bank account debit to partners capital 20,000. Then interest on capital, first general interest on capital account debit to partners capital account, and then interest on capital is written off against profit and loss appropriation account. So for interest on capital it is this one, for salary it is that amount, for interest on loan it is this amount, and divisible profit this amount. And as a result of this, what we have seen, that we have got some results, some balance of capital account, and that capital account balance was different. Like if I am not wrong, it would have been nearly 1,80,000 in case of Mr. A, and more than 1 lakh in case of Mr. B. So you see, the opening balance of capital of Mr. A was 1 lakh, and the closing balance was found 1,80,000 around. In case of Mr. B, it was 60,000 opening balance, and closing balance was how much? It is 1 lakh plus. So, you see the opening balance of A and opening balance of B, and opening balance of A at the beginning of the period and opening balance of closing balance of A S capital at the end of the period is differing, and it is also the same in case of B also. So, it means the opening capital balance and closing capital balance are not the same. So, it is the capital balance is varying. Okay, the capital balance is varying in different dates. Okay, so capital balances are varying on some different dates, and since it is variable capital, so it is known as variable capital concept, and the method is commonly known as fluctuating method of capital maintenance. This is the fluctuating method of capital maintenance. Fluctuating. Why fluctuating? Because the balances are fluctuating from one day to the other over the period. Okay, and so under fluctuating method we prepare a single account. And what is that account? That is capital account. Clear? Now, what are the problems? In fluctuating method, the capital balances are differing. Capital balances are differing. Clear? Are you getting me? First, fine. Now, think. The man, it was 1 lakh and it was 1,80,000. Thanks to what? That the drawings made by them was lower. Drawings made by them was lower than what they have added to their capital during the year. So, as a result, the capital account, the opening capital was 1,60,000 total, the closing capital was more than 1,60,000. But if the partners withdraw more amount, here the amount withdrawal is only 10,000 and 60,000, 6,000, but had the partners been withdrawn much more amount than what has been credited to their accounts, then in that case the closing balance of capital would have been less than 1,60,000 in total. And if that happens, then what will happen? The capital required for operating the firm, the minimum capital required for operating the firm would have decreased. And this just capital integrity would be hampered. So, what should we do? It is another concept is that in order to avoid that problem, we maintain another method. We have another method, and it is known as fixed method of maintenance of capital. Fixed method of maintenance of capital. In that case, what do? We prepare two accounts. One account is capital account and the other account is current account. Capital account, it remain fixed, okay, and all the adjustments with regards to the appropriation and drawings and all this are made in current account. So, current account is the account where we should credit all the earnings of the partner in the firm, and it will be credited and it will be debited for all the outflows made from the firm to the partners. Okay, तो पार्टनर से जो पैसा पार्टनर्स को क्रेडिट होना चाहिए सब हम क्या करेंगे विद रिस्पेक्ट टू इंटरेस्ट ऑन कैपिटल, पार्टनर सैलरी, इंटरेस्ट ऑन लोन, प्रॉफिट, शेयर ऑफ प्रॉफिट, जो जिस कारण से ये पार्टनर्स कैपिटल क्रेडिट होते हैं वो सब हम करेंट अकाउंट में भेज देंगे. क्लियर? एंड इन द सेम फैशन जो अकाउंट से पार्टनर्स कैपिटल अकाउंट घटते हैं उनको करेंट अकाउंट का डेबिट साइड में ले लेंगे. ओके, सो करेंट अकाउंट शुड बी डेबिटेड फॉर ऑल द outflows, okay, from the partners balance, and it will be credited for all the inflows of the partner, that is all the incomes of the partner during the year should be credited to capital account, current account. So, on that premise, though, we have to prepare two account under fixed capital method. Clear? Now see, now let us come to the, so what we have in a nutshell I am letting you know. The methods of maintaining capital in case of partnership firm, there are two methods, one is fluctuating method and the other one is fixed method. In fluctuating method, in fluctuating method there is a single account, that is capital account is prepared, and that account contains each and every transactions. Okay. And as a result we are having varying degree, varying amount of capital, opening balance and closing balance. But it has got some, it may result in some problem in case of firm, because the partner's capital account may be changing from, it may be that the total amount of capital balance of the partner may be less than what should be the required amount of capital, and as a result of this we want to overcome the problem, and that is why we follow another method, that is fixed method. In fixed method there are two accounts, one is capital account and the other one is current account. Okay. Now with the same problem, with the same information, I am going to prepare our capital account and the current account and under the method, fixed method of maintenance of capital. Okay friends. Now see, what is the opening balance of capital? The opening balance of capital is 1,60,000. So it should be, so in this balance, this is the balance, okay, by balance BF. The concept of BF I already told you in different occasions, and it is 60,000. Clear? So friends, you see just what is the difference. So this amount will come in the capital account. Clear? Now this will not come over here. So it is the current account. So opening balance of capital account will get the birth in the capital account. Okay. So it is 1,60,000. Now what is current account? Current account I have already told you, it is the account, as the name suggests. Current means presents, okay, present day issues. So what are the issues of this month, this year should be given birth in our current account. So what is the opening balance of current account? In yesterday's problem we did not have, but today I am giving you. There is a current account, A's balance is 15,000, so it is 15,000. Clear? So it is 15,000 for A. And in case of B, it is 10,000. What does it mean? That means the amount credited in the previous year to capital account of A was more than what was debited, the amount credited in the current account of A was more by 15,000 than what was debited to his current account. It means he has got a positive balance. But in case of B, what has happened? B withdrawn much more amount than what he got in the previous year. So in the previous year he has taken much more amount from the firm than what he got, and as a result he has a negative balance. Okay, in a nutshell, in a very simple word, A's drawing was less than what was his income from the firm in the previous year, but B's drawing was more than what was his income in the previous year. Okay, now then comes next issue. The additional capital of 20,000. Now where should we give it where should we put it? This 20,000, there are different concepts. This 20,000 simply, this investment, additional capital invested by A, okay, additional capital of 20,000 invested by A may be a temporary, may be a permanent one. If it is temporary in nature, it means it may be withdrawn any time. So in that case, it would get the birth, this would get the birth in current account. But if A is interested to maintain this amount as fixed in the organization, in that case, this amount will not come over here. Okay. So there are two arguments, alternative arguments. If this additional amount is a temporary issue, in that case it should get birth in current account. Clear? And it should be created by bank. and it will be bank account debit to A's capital, a current account. But let us think that it is a permanent issue. Let us assume that it is a permanent issue, and in that case that amount will go to the current account, capital account of Mr. A. So what is the journal entry? Bank account debit to A's capital. Okay. That is additional investment. It is how much? 20,000. Okay. So friend, whatever you do, you make a note. Okay. As a solution, you make a note that this amount of 20,000 has been taken as a fixed investment on the part of A to the firm. Okay. So friend, so this is additional capital. So it has been treated. Now then comes the other issues. At the end of the year, what we have got? We have got 1,20,000, and that thing has already been appropriated, friend, and it has been done in our previous problem. In the last problem, in our episode number 216, I have shown everything. Okay, so where it will come? Now it is the opening, drawings. Okay, where will we put the drawing? The drawing will be in the debit side of the partners combined current account. So when the drawings are made, what is the journal entry? Drawing account debit to partners, drawing account debit to cash, it may be, drawing account debit to bank, it may be, drawing account debit to purchase when the materials are withdrawn from the firm, and this drawing account is neutralized against the current account. So partners current account debit to drawings account, and this is that amount, this is that amount. Clear, friend? So I think up till this part we have cleared. Now all the income parts will be credited to partners current account. What is that? Which was in the last episode, all were credited to partners capital account, but it is credited to partners current account. Interest on capital, yesterday I have calculated interest on capital on 1 lakh 10,000, and he has made an additional capital. He has invested some additional amount of capital 20,000. So on that amount is 1,000. So it is interest on capital is 11,000. In case of B, it is how much? 10% of 6,000. It is 600. Okay. Salary in case of A at the rate of rupees 3,000 per month, it is 36,000. Salary in case of B, it is 20,000 remuneration anyway. So it is 24,000. Interest on loan. The loan extended by Mr. A, how much? 20,000 at the rate of 7%. Sorry, on 1,720, and the rate of interest is 6% per annum. So it is 600. Okay, clear? So it is 600, and the remaining profit was distributed in that way. And capital and interest on drawings were 2,000 and 120, as we have already done in the last occasion. Okay, what are the drawing? 10,000 drawing and 6,000 drawing. Okay, the date of drawing is not specifically mentioned, so we have taken it the average time. So it is 200 and 120. Clear? Now this is the total balance of capital account. Total of current account. Okay. Now what is the total of current account? You see, just friend, you calculate. The process is the same. I am very poor in arithmetic. 6 and 6, 12. 2, 1. Okay, so in case of A, it is how much? It is 88,232. In case of B, it is 88. 7, 2 to 4. So friends, I think No problem is there, although I am not strong in arithmetic, but in this time I have not, I have made addition, I have made no mistake in addition. Okay, so you see, 88,232, that is the total of Mr. A. Now, the amount, it is how much? You know the balancing, it is 88,232. Now, what is the difference? It is 32 and 88. So, 78,032. That is the closing balance of Mr. A, closing balance of current account of Mr. A. Now, in case of Mr. B, okay, it is how much? 68, it is 9, okay, no, sorry, so friend, I think it is clear. Okay, so this is the closing balance of capital current account of Mr. B. Now, thanks to God, B is lucky one. He has withdrawn less amount than what he has got from the firm. Okay, so this is the closing credit balance. Now, the balance is being brought down 121 by balance BD. How much? 78,78032, and it is 3030968. Clear? So, the current account has been prepared duly, and now what is the total amount? It is 1,20,000 of capital account of A, and nothing has been debited. The closing balance is 1,20,000. Okay. So, it is 1,20,000, and in case of B, it is how much? It is 60,000. Okay, it is 60,000. So, the balance is 1,20,000 in case of A, and in case of B is it is 60,000. Clear? So, friend, this is the method of maintaining capital account in fixed method under in partnership firm. Clear? So, you see, just in a nutshell, I am letting you know there are different methods of maintaining capital. First was a fluctuating method. Fluctuating method means the balance of capital in the opening date and the closing date would vary, and that method is known as fluctuating method. And there is under fluctuating method a single account is prepared, a single capital account is prepared, and that is capital account, and all the issues which are to be credited to partners capital account are credited to that account, and the heads for which the capital account is created are partners remuneration, interest on capital, interest on loan, okay, and share of profit. And all the issues which will result in reduction of the capital, that is drawing, interest on drawing, will be debited to the capital account, and ultimately we get the capital balance, which will be different from what was in the opening balance. Clear? So, but that is not a prudent issue. It is not considering the point issues of capital integrity. We would like to maintain a certain amount of capital fixed in the organization. So, a fixed capital account is prepared, and another account is prepared, and that is given the name of current account, and all the adjustments are made in the current account. So, under fluctuating method there is a single account, and under fixed method there are two accounts. One is capital account and the other one is current account. Capital account contains the fixed amount which remains in investment in the organization, will be treated over here, and current accounts will be prepared, is to be prepared for making all the adjustments, and as a result current account balances may be must be varying, but the capital account balance will remain the same. But so far as the new introduction of capital, what should we do? Should we put it in the current account? No, my suggestion is that we have to depend on what the information given, but if in the absence of any information we should take it into account, that we should assume that the investment investment made, additional investment made by partner is a fixed in nature, and it will go to partner's capital account. Clear? So friends, that is in these two classes, that is episode 16 and 17, I have completed the methods of maintaining capital account. Okay. So thank you very much. Stay tuned with us. Go through the topic minutely. Any problem should be intimated to me in my WhatsApp number, and go on making comment, please. Okay. Thank you. Stay tuned with us.